Hi everyone, today let's talk about refinancing. Then we'll go over the usual market indicators starting with sentiment and seasonality and then some others. Then we'll get into the charts, as well as my results for the week and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So waves of refinancing are coming over the next several years, and they illustrate that here. You can see up to 2025, really through 2027, we have a lot of debt maturing. Some of those are bonds and some of those are notes. Some of those are just loans. But across the board, we have a pretty short term on some of this debt, and that's obviously going to be impacted once these companies have to refinance at the higher rates that are currently available. Some companies are being affected now as we move into 2024, but as this gets a little bit further into 25 and 26, more and more companies are going to be affected. You can see this is US dollars in the trillions. In 2027, we top that $1 trillion mark in terms of debt that is maturing. According to the Fed's current dot plot, we'll see rates a little bit lower, so the impacts might not be as great. And potentially that's something that they're already factoring in, why they're talking about cutting about 2.5% to 3% before the end of 2026, probably to facilitate some of these larger refinancings that have to happen during that time period. Obviously, smaller companies are going to be mostly impacted by the more pressing need to refinance and keeps their heads above water, whereas larger US firms have a lot more cash on hand and they might not be forced to pay as quickly, and they might not be forced to refinance right away. They can be a little bit more patient, or they can use some of their cash on hand to pay off some of their debts in the short term and then take out more loans in the future. Obviously, emerging companies are going to be the more valuable one. Obviously, emerging market companies are going to be the most vulnerable, and this tends to be true. Companies that are typically a little bit weaker obviously are going to be more influenced by these interest rates going forward. I don't think this has any impact really in the short term, but it is something to keep in mind as we look forward to the next 3 to 4 years. Moving over to sentiment, starting off with fear and greed. This really has not moved very much over the last couple of weeks now. Last week was 65. Friday was 70, and then current is 67. So it did step down a little bit. A year ago, we were at 60. A month ago, we were at neutral. You can see extreme greed getting across markets here. Always something to pay attention to. We have lots of extreme greed indicators. Almost all of them at this point are in extreme greed, indicating this market rally might be coming to a close. People are getting a little excited on the rally. The VIX is at neutral. It's been flat. We've been continuing to watch that one. It is something that we'll watch. And then safe haven demand and junk bond demand are in fear and extreme fear, which is interesting. Bonds have been acting pretty strangely over the past year. The yield curve is inverted, and when most of the markets were in extreme fear, we saw junk bond demand in extreme greed. And now we're seeing the inverse of that. I don't think these are great indicators right now. They might be more valuable in the future, but I am watching the put-call ratio, stock market breadth, stock market strength, and momentum indicators all in extreme greed. We haven't really hit extreme greed overall yet, but it's definitely worth paying attention to. Moving over to the AAII Sentiment, you can see we got all the way up to 51.3. Super bullish. That's almost at the 1-year high, which was from July, and it was just by 0.1%. So we are effectively at a 1-year high for the bullish sentiment. Bearishness absolutely has been crushed here. I wish it gave a 1-year low for these metrics too. That would be interesting. But you can see 19.3. We did see 19.6 at the end of November. I would imagine this is pretty close to the lows. Maybe a little bit lower it could go, but this is pretty low here for the bear side. And then neutral, kind of sitting in that same historical average. Pretty interesting. They did get squeezed there for a week, and you can see we're well below the high, very close to the mid-range. So lots of bulls, not very many bears, and the normal amount sitting in the middle. Moving over to the Almanac Trader, he did release a new calendar here. It's a little bit of a lagged chart. You can see it kind of ends right around the 12th, and we're currently sitting at the 17th. So on this weekend here between the 15th and the 18th. And you can see from this current range into the current day, we should have seen a bit of a down move. We didn't get that. I wonder if we're just a little bit lagged on that and we're going to see this down move a little bit later in the month. And then we kind of see a rally into the last couple trading days of the year, into the beginning of January at this point, just kind of offset to the right a little bit from historical averages. Kind of seems like that's what we're seeing. Again, seasonality is still bullish, so we do have to understand that, but we have been on a massive run and it would make sense to see at least a little bit, a 1 to 2% pullback over the next couple of days, and then a rally into the very end of the year, and then early January as well. And then looking at the calendar, we just had the triple witching day, which tends to be a little bit more bullish. And then as that subsides, we see a little bit more bearishness going into the end of next week. Not sure exactly how that correlates with the chart we just looked at, but you can see big bearish day on Tuesday in terms of probabilities, and I would expect Monday to be a little bit more bearish. Mondays are typically the more bearish days, and then you have Wednesday, Thursday as a little bit more bullish. We have a bullish probability on the 21st, and then we have the Santa Claus rally into the end of the year, but that last trading day of the year can be a little bit sketchy, so keep an eye on that. Right now, slightly bearish in the early week, bullish in the end of the week, and then bearish on the last day of the year. Moving over to the economic calendar, nothing for Monday. On Tuesday, we got CPI headline and core for the Eurozone. And then we got building permits for the US at 8:30, nothing major there. Looking at Wednesday, we do have existing home sales as well as consumer confidence. Those will be pretty impactful at 10 o'clock on Wednesday. Looking at Thursday, we do get GDP numbers as well as Philly Fed manufacturing. That is expected to be negative, which is interesting. GDP numbers have been extremely strong. They continue to be strong. I would expect them to be strong again here on Thursday. Fed balance sheet continues to roll off pretty strongly. And then looking at Friday, we have core durable goods as well as core and headline PCE data at 8:30. Quite a lot of data coming out at 8:30. Then in the afternoon, you have Michigan numbers, new home sales at 10 o'clock. That's always interesting. And that'll wrap it up for the week. Moving over to Max Payne, you can see very few options, just under 1 million here. Call wall 475, which gives you about 1% chance, 1% of upside potential. 480 sitting pretty strong there at 52,000 calls. And then put wall all the way down at 434. Not a lot of puts in this mid-range, which in my opinion does lend to a little bit of downside potential and definitely downside risk versus upside potential. Lots of downside risk to that put wall. Very little upside potential to these call walls, even if they're not very strong. Put call ratio still very, very strong at 3.3, which does lend to a little bit of bullishness. We'll take a look at the overall put call ratio later on the charts. Moving over to the charts, starting off with the SPY here on the weekly chart, you can see super strong candle, 2.5% of upside. Bullish momentum continues. We are not overbought yet. Definitely interesting to see. It could go higher to that trend line. Currently sitting up around 48.10 or so. And you can see that is a very important trend line here on the SPX. That trend line marked the top here in January of 23, marked a top here on 28 November, and then you can see it did kind of mark this bottom here in September of 22. So pretty interesting, pretty commonly known trend line, and those are typically the more impactful ones. Trend lines that everyone can see. Again, gives you about 4,800, 4,810 as potential upside, and everything still looks bullish here on the weekly chart. Moving over to the daily chart, it is a lot less clean. We talked about this a little bit on the Friday session and the Friday video. You can see this really strong divergence between momentum, much higher highs. We hit the momentum peak going back to 15 November. You could argue it's very close to the peak from this consolidation in the first week of November. Much higher prices, much lower momentum. And then you can see an island reversal. So we rallied on Wednesday, gapped up, held, gap down, dojied, and now we could really go either direction, but in the short term, you have to respect that as an island reversal at a trend resistance, momentum stepping down, RSI breaking down pretty strongly, big volume on that step down as well. On the daily chart, this does look quite a bit more ominous than it does on the weekly chart. In terms of levels, to the downside, 467, and then to the upside, 470.80, and if that was to break to the upside, 474.80 468.78. And then to the downside, we have 463.70 as a potential, acknowledging that that is basically on top of the 9 EMA. If we were to get into that range, we might find some support like we did here at that 9 EMA. Moving over to the NASDAQ on the weekly chart, you can see similar to the SPY, pretty strong up week, 3.35%. Got above this trend line here. Next one sitting up around 17,000. 17,000 would be an all-time high if we did get into that range. It is worth noting we still have a little bit of divergence here on the weekly chart. We hit the highs on RSI going back to July. We have higher price action here with weaker strength. Doesn't mean we can't overthrow that and get an equal rating on RSI. Can continue to go higher, but right now we do have some divergence. Do have to watch that. Momentum still bullish. Everything looks clean. And then if we were to overthrow this shorter term trend line to that major one, that would give you about 17,250 up to potentially 280. Moving over to the daily chart, you can see we are just barely below my 405.50 level. That is a pretty important level. We did test it here on Thursday, tested it again here on Friday, could not get above it. Does kind of look like a double top on the shorter time frames. We'll look at that in a second. You can see we're at resistance. Again, similarly, momentum much weaker than we saw in this previous rally. RSI is higher, so we don't have divergence the same way on the daily chart. Moving down to the 4-hour chart, you can see pretty clear double top. You can see we're still in that second step. If this breaks down and takes out the midpoint, then we could be looking for a little bit of follow through, potentially even a change of trend. You can see we do have an RSI divergence on the 4-hour chart with a peak high going back to the after hours Wednesday, and then we made that same double top at that same level with a much weaker RSI reading, so showing a little bit of strength on the shorter time, so showing a little bit of weakness on the shorter time frames. Just not seeing it yet on the daily chart. Moving over to the Russell, you can see we did end up wicking that high, that same level that we continue to find rejection at, the 190.70 level. You can see we touched that area here in July, touched that same area here in January, and sure enough, we are here once again. If this breaks out, that could be a pretty interesting move. Let's go ahead and zoom out a little bit here. You can see last time we were above this level is going all the way back to February of 22 in this previous consolidation. And then before that, we consolidated for a very long time from February of 21 all the way through here to January of 22. So basically an entire year of sideways price action above that level before ultimately breaking down to this consistent low that we tested 3 times, back down around 164 or so. We tested that once more before this most recent rally. So if we break out, a little bit of upside potential back into those previous consolidations, absolutely possible. This has been the outperformer, bullish momentum, bullish RSI, still looks very strong on the weekly chart, and then a very strong candle to boot, almost 5.5%. Moving over to the daily chart, however, we were watching this flag setup, so we rallied, flagged, broke out. That breakout has concluded up around 198.75. You can see we almost got an engulfing candle on the Friday, which is not great. I do want to go ahead and zoom in here to that 1-hour chart, and again, you can see we did end up getting a higher high on that pre-market trading. So we consolidated sideways basically all of Thursday, gapped up in the pre-market. And you can see we felt really strong throughout the session, tried to bounce, but it was pretty feeble into the end of session. And we are below most of the shorter term EMAs. And if we continue to hold below these EMAs, it would not shock me if we got a little bit of a pullback on the Russell. Like I said, the Russell's been the top performer, but you do have to account for this pretty strong down move that we saw in that Friday session with a decent amount of volume. If it breaks down, watching 195.15, and then you got the 55 EMA sitting at 194. And then you can see that volume spike there at 193.40. And then after that, there's really not a lot of volume here on the hourly chart until we get all the way back into this 187 area, which would be a pretty substantial move back down to that 200 SMA here on the hourly chart. Moving over to the Dow on the weekly chart, again, very strong candle, 2.62%, bullish momentum, bullish RSI. This is an all-time high close here for the Dow. You can see that going back to the peak high here from January of 22. We've massively overthrown that, looks very bullish. Everything still looks very strong, took out all of these levels, don't have any clear overhead resistance at this time. Truly in price discovery, everything looks very clean. It is worth noting we are almost overbought. We ended up closing just below it. RSI of 69.21. Would not shock me if we touched it during this wick high that we saw. We did see a very slight pullback on the Dow at the end of the day, just like everything else on Friday. And let's go ahead and look at those shorter time frames. And you can see that pullback on the daily chart, gap up, gap down, did try to recover. Most of it ended up down 0.19%. Volume continues to ramp on that down move. Momentum stepping down. You actually have triple divergence here with that peak momentum going back to 15 November, had another rally, higher prices with lower momentum, and then even more higher prices with lower momentum. So this rally is truly exhausted in my opinion. Moving over to that hourly chart, you can see we did have a little weakness, didn't really break down too much, a couple of tests, and it looks more like a consolidation at this point. Doesn't look as weak on that hourly chart. It is worth noting the 9 is below the 21, but that is normal consolidation pattern in my opinion. Moving over to the equal weighted S&Ps, you can see we did get above that resistance at 155.79, closed above it on a weekly basis. That was the peak high from July, as well as the peak high from January. Took out both of those. Does look very similar to the Russell. And you can see zooming out, we did have a little bit of a consolidation above that level. Getting pretty close to those highs. Let's go ahead and add a level here at this wick high at 160.31 for some resistance. Then we'll go ahead and add one more at the all-time high at that 164.87 level. So which does give you quite a bit of room to that next resistance. Again, bullish momentum, bullish RSI, really strong volume on that candle. Go ahead and look at the daily chart just for a moment. You can see we did get a similar move, gap up, rally on Thursday, gap down and fell on Friday. Not a ton of volume on that down move. But again, triple divergence, peak momentum, slight momentum bump with higher prices, but continues to look rather weak in terms of momentum. And you can see it's also very extended off of that 9 EMA, sitting down at 152.52. Moving over to some ratios, SPY Russell and NASDAQ SPY. Russell continues to outperform here on the weekly chart. NASDAQ did outperform a little bit on the SPY. Definitely interesting to see that. I didn't really expect that. It seemed like the SPY was going to outperform. Big tech stocks have been rolling over a little bit, but NASDAQ showing some strength. We're right at these previous highs going back to mid-November, and it looks like we might push up to 355 as the next resistance. Above that, there is quite a bit of room in my opinion, and you can see the most recent highs going back to February of 22 was right at this current level, and then we did overthrow that level a little bit here in November of 21. So very important level we're at right now. If we jumped up, you got 355. NASDAQ outperforming the SPY, Russell outperforming both. Moving over to Apple and Tesla. Apple did get a new high close. That is a new all-time high close for the weekly chart at 197.57. Bullish momentum, bullish RSI. Big volume on that candle as well. Tesla actually looks like a better opportunity here as it looks to cross into bullish momentum. We talked about this looking pretty strong in this consolidation, and sure enough, it broke out here today, took out these downtrend lines, very close to 255.44. Above that, watching 264.68. All of this does look bullish here on Tesla. Really across both of these, it looks bullish. I do want to jump down to the hourly chart on both of these just for a moment. You can see that really strong push over the last couple days here on Tesla, and then we held at strength, holding that 21 EMA on the hourly chart. Apple, on the other hand, did look quite weak on Friday, along with the rest of major markets. Held in the pre-market, consolidated, started to show a little bit of weakness, and then it rolled over into the end of the day. Not great there from Apple. Definitely interesting to see that. Again, indicating some potential weakness over the Monday, Tuesday sessions like we talked about earlier. Moving over to Broadcom and NVIDIA. Broadcom having an absolutely colossal week, almost 20% on the week. Absolutely insane. And really on pretty limited news. We did see a little bit of news out about their company, and it was all positive as you would expect. Price targets of around $1,100, and it shot straight to that level. Super strong momentum, super strong volume. And then moving over to NVIDIA, actually did have a pretty strong week, almost 3% on the week. Momentum continues to tick towards bullish on the weekly chart, crossed back above the SMA on RSI, so looks good there. Let's go ahead and jump NVIDIA down to the hourly chart. Did want to show a little bit of that slight move here. You can see that most recent move, couple of tests of this trend line through here, and then we eventually started to break higher, creating some new highs. These were technically higher, but they were still pretty weak, testing this trend line. And then we clearly accelerated towards the end of the week. Potentially sympathy plays from Broadcom. NVIDIA hasn't been a huge outperformer here recently. Obviously, it outperformed massively over the course of the year, but now it's accelerating to the upside, and semiconductors continue to be a very hot sector. Moving over to staples and discretionaries, pretty clear wick rejection here on staples. got very close to that 72.50 level, and then you can see we closed on the bottom half of that candle. Not great, could be an initial test of these previous wick lows, but still bullish momentum. Volume pretty strong, interesting to see there. Jumping down to the daily chart there for a moment, you can see that pretty big move down on Thursday after getting very close to that 200 SMA. Still held the 9 EMA, still held this 70.85 level, so could be an initial test. Look for a follow through there potentially over the next week or so, in my opinion. And then looking at discretionaries, massive week, 3.5% almost to the upside. Bullish momentum, bullish RSI, everything looks good here. Closed almost at the top of the candle, and then jumping down to the daily chart there as well. You can see gap up, rally. Did rally just slightly on that Friday session. Again, clear divergence on the momentum, but RSI continues to make higher prices and higher RSI reads. Moving over to transports and industrials, you can see both of these also had a massive week. Transports 4.2%, industrials 3.7%. You can see transports very close to this high from July. And this is a very important part. So if we get here and we double top, that could be quite bearish for transports. Momentum still bullish. Look how low this volume has been over these past couple weeks relative to what we had been seeing. Definitely interesting to see that. Jumping down to the daily chart here just for a moment, you can see we gapped up, rallied, dojied here on Friday. Might see a little bit of a pullback or some sideways chop over the next couple days there. No divergence on RSI, obvious divergence here on momentum. And then industrials, again, massive breakout, well above these previous highs. This is an all-time high here for industrials. Does look like it can continue to go higher. Looking at that daily chart just for a moment, gap up, rally, sideways chop, inside candle, not great, but still bullish momentum. RSI stepped down slightly, still very strong on that volume. Could be some profit taking on this most recent spike high, then see a pullback to that 9 EMA. That could be interesting. Currently sitting right around that 110.27 level. Moving over to breadth, starting with the 20-day average. I just want to show this on the full screen here. You can see all of these previous highs in this same exact region. We got here again, we pulled back slightly 2 weeks ago, and then last week we wicked that high and then pulled back a little bit. Does seem like we're gonna fall down a little bit more here on the 20-day breadth. Momentum continues to track to the downside. RSI still showing a little bit of strength, and this could take a couple of weeks. You can see here we were in this same range for 6 weeks before we ultimately had that bigger breakdown. I don't necessarily think that's what we're going to see, but it is worth paying attention to. There is risk to the downside at these current levels. And similarly here, looking at the 50-day average, you can see we are also at that critical level, right in this 92 range. We wicked all the way up to 90.85, which did eclipse this previous high from July, tested that high. You can see we also tested these close highs from 21 November and the open of the candle on 5 December, going back to 2022. So we're at a clear resistance point. Momentum still bullish. If we see a step down next week, that could be an indication where we're set to see a couple of weeks of downside. That would kind of be sour for the Santa Claus rally. We are in a bullish seasonality, but it seems like that seasonality came a little bit early. So we rallied through all of November, basically all of December. Now we've kind of topped out early, which is interesting in terms of seasonality. And then we have to see what happens from here and how long this takes. It's worth noting on the 50-day average, once we get into these ranges, it doesn't take nearly as long as the 20-day average to break down. You can see here we got into this range, one candle, break down, got into this range, one candle, break down, got into this range, and then we immediately broke down. So interesting to see. Definitely a little bit better indicator once you get into this range. That is typically overbought conditions. Moving over to the put call ratio, we did get a wick down to that 0.7 level. Not super important. Usually you want to see a little bit lower than that. 0.5 is where you're definitely getting some wick lows, kind of conclusion of rallies here. You can see that here in February before we had that bigger move down. And then once you get into this 1.4 area, definitely an indicator. You can see that we had here in October. So fairly interesting around 0.7. I would want to see this get a little bit lower, maybe 0.6. 0.5 is definitely a strong indicator, and we haven't hit any of those yet, so still trending down into that range, in my opinion, on put call ratio. Moving over to yields, you can see these have been cratering for a while now. Did see a little bit of strength on the 2-year. Big wick low, got close to that 2.25, and then on the Friday session, fully engulfed that candle to the upside. Obviously still very much a downtrend, but kind of showing some signs of rejection there. If yields start to rally a little bit, that could be interesting. 10-year, however, does not show any strength yet. continues to trend downwards quite strongly. Let's go ahead and look at that next level, down at 3 1/4. We're below all the EMAs and SMAs, momentum bearish. We are oversold on the daily chart, which is interesting. Let's go ahead and look at that on the weekly chart, see where we're at in terms of strength. Did overthrow that 55-week moving average, and no longer term EMAs to consider. Not oversold yet, strong bearish momentum, so still looks very weak on the longer time frames, but 2-year showing some slight strength on the daily chart. Moving over to the dollar on the hourly and the daily, we talked about this one before, but it did show a little bit of short-term bullishness. It was actually pretty aggressive here, crossed the 21, rallied super aggressively, crossed the 55, rallied aggressively. Everything looks clean on the shorter time frames. Obviously on the medium term, big down leg Wednesday, big down leg Thursday. Friday session did not engulf. Let's go ahead and look at that on the weekly chart. So you can see that is a major trend line. Definitely interesting. RSI continues to look weak there. Momentum still very bearish, could continue lower. Got the 144 EMA sitting all the way down to 100.6, which would coincide very closely with this low here from May and April. So maybe you see a little bit more leg down over the next week or two on the dollar. That would give equities a little bit of strength, but definitely interesting to see that on the hourly chart, showing a little bit of short-term bullishness. Moving over to bonds, you can see J&K got up to that 94.82 level, rejected from there. Still very strong momentum, still very strong RSI, can absolutely continues to break out on J&K. TLT also a very strong move, 4.88% to the upside. Look at this volume, just continues to increase on this most recent move. Did get to the 55 EMA. That is interesting. So that's a strong downtrend. And some dynamic resistance we could see there at 99.34. Couldn't get above it. You also have that strong psychological level of $100. And we did see a little bit of short-term strength on yields, which was interesting. So if we saw that yield follow through, we could see bonds move a little bit lower off of these pretty clear resistances. Obviously, we're not seeing that yet. Just something to watch for over the next week or two. Moving over to the VIX, you can see we got so close to my 1177 level. The low for the week was 1181, very, very close. Bearish momentum, bearish RSI. You can see we're in this previous consolidation here from October, really from May of 18 all the way through here to January of 20. Obviously, there were some pretty substantial spikes through there. But we continued to return back to this low consolidation, and that was typically the low for the VIX. You could go back a little bit further here and see we did get all the way down to this 9 range, which is super low for the VIX. That's not very common. You can see going back even further. Last time we were in that 9 range is going all the way back to December of 2006. And then after that, we did have a massive spike higher. So it's worth paying attention to. We are in an area of complacency, but we can stay in this region for a couple of weeks before we see any major spikes. But eventually it will come, and it's something to watch here on the VIX. Moving over to my accounts, I did manage to turn a profit. Not a great one, but still okay, about 0.5% on the week. Definitely should have been stronger with the move that we saw on the NASDAQ. I am just hesitant, to be honest. I think we're kind of in that conclusion, blow off top type move here recently, and eventually that will culminate and we will see some pullbacks. And when you see those culmination tops, the pullbacks are typically pretty aggressive. We're seeing that pretty strongly on breadth. We're in those key resistances, and we have a long way to go to the downside before we find major support on breadth. Otherwise, looking at my positions, I have an IWM position. I do have a very deep in the money covered call at 187 for $12 credit. We'll see if I continue to maintain that or if I roll it out this week to maintain that 45 days to expiration. I really don't want to pay any more debits on this. I do think we're going to see at least some kind of pullback. We'll see how that plays out and how long it takes. And then looking at the Qs, I am bearish going into the Monday session. Mondays tend to be weaker for markets, and we have been on a colossal rally like I have mentioned. Still have 200 shares, still covered by this 400 call here for 41 days from now at $11 credit. So that gives me all the way up to $411 for potential profit over the next 41 days, which would give me about $600 per call on that. So about $1,200 more potential profit on that position. And then I do have a short call here at 62 days. That's at $16 credit. I don't know what I'm going to do with that, whether I'm going to turn that into a covered call or if I'm just going to continue to play puts to get into some shares. Again, I think we're going to see some short-term volatility, at least a little bit over the next couple of days. So I'm slightly bearish there. there, but really long dated on both of those positions. And if I'm forced to roll out, I still do not want to pay any more debits on that, as I do think there's some downside to come over the coming days and potentially weeks. In terms of profit and loss graph, I just want to highlight I still have quite a bit of room to the upside before I start to lose money, all the way up to 437 on an expiration basis. And then to the downside, I have a lot of room as well, down to 365 before I start to lose money. So lots of room for price movement before I am losing money on this position, but you can see my bias is slightly to the downside, as I do expect a little bit of downside, like I mentioned. Let me know down in the comment section what you think of the debt refinancing problem that companies are set to see over the next couple of years. Has that already started? And how much will it ramp up, and how much will that affect markets going forward? Definitely interesting to watch in the coming years. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.